All right, now we're going to go into some use cases, and then we're going to go into the charts. We're going to show you also the indicator, but let's start with the use cases. We're going to start with Forex. We released our blind spots on Forex about a few months ago, and I think the model is actually very unique and can provide a lot of really great advantage. So let's go over why we develop it first and why it can be important for Forex traders. So the Forex market presents a unique challenge for us. The Forex market is fragmented, mostly is operated over the counter, so OTC markets. So there's really a lack of a centralized exchange. And again, price discovery, data transparency is also an issue because we don't have a repository of data that we can use. So even like the options on Forex are very, very hard to get, and there's not a lot of data available there, right? So they're very, very different from the stock market or the futures market. So that's why the blind spot model adapt to these characteristics by leveraging a combination of diverse data sources and advanced analytics. We look at, for example, option positions, option positioning by looking at the Forex futures data that we have. We look at the option flow coming from that asset and where big players can be positioned there. We also look at momentum indicators to understand how different Forex pairs are moving together. And of course, cross-asset correlation is specifically valuable in Forex. Because currencies pairs are really linked through economic relationship and global capital flow. So we can actually derive a lot of interesting correlation coming from the Forex world, and we can apply that by integrating these inputs in our blind spot model that can help us identify actionable zones where the price would be likely to react. So for Forex traders, you can actually combine blind spots with your technical indicators, with your support and resistance areas, and that can become a very great tool for you guys. If we look at our Forex coverage, we cover right now our major pairs. So we have Australian dollars, Swiss franc, British pound, gold, Canadian dollar, JPY, euro, and so on. So those are all available. Blind spots are both available on the currency pair as well as the future assets, so 6A, 6B, and so on. So those are all available within the indicator. Let's look at some examples. So here we have an example from a week ago or so on the US Canadian dollar Forex pair. So as you can see, like really the price moved around those blind spot areas. They could have offered a lot of interesting entry and trigger points. So if you were in a trade, you could have used that as your target, or you could have used that to initiate a trade, especially those BL2, BL3 areas. Very, very interesting move there. So very, very important. Same thing on euro. So here we have a reversal trade at around BL8. The price moved, stalled around BL9 and went all the way up to BL3 and then reversed back. So you could have taken a trade at BL8, you could have take partial profit at BL9, and you could have take full profit at BL3, or you could have also taken potentially a reversal trade at BL3 at the top when the price action would align with your strategy. Here is another example with JPY. First, we have a very strong potential entry point at BL1 at the bottom here on the center of the chart. Then the price moved to BL7 and BL2 and kind of like went in a range for the whole day. So depending on whether you're a scalper or a position trader, you could have used that data to potentially understand entry, exit, or even manage your risk right there. Another example on Aussie dollar. Again, here, very nice move from BL8 at the bottom to BL6 at the top, and then a reversal almost all the way down to BL9. Another example, Canadian dollar, from BL3 all the way to BL1, price kind of like range a little bit on that BL4, BL5 area, and then reverse back.